the leading voice of the new right and the prime target of the old left. Andrew Wilkow and the Wilkow majority.
Okay. I don't really want the 47 million uninsured to drop dead. I think you know that I was putting that into creative context. Nobody wants the 47 million uninsured to drop dead. That's not the way we approach this. But if you look at this notion of pre-exist, how can you insure against something that has already taken place? If somebody comes to an insurance company and says, I have cancer, give me insurance, they're not asking for insurance, they're asking for treatment. The federal government will be in no better position to quote-unquote cut costs if it is basically putting out a bowl of milk for stray cats. Now, with regard to company plans and pre-existing conditions, that is different. You see, if your company has, let's say, 1,000 employees or 2,000 employees or 3,000 employees or 10,000 employees, when your HR department negotiates premium rates with the insurance company, they say, look, we might find someone of value who we hire who has a pre-existing condition. If you want this contract to do business with our employees, you're going to have to absorb the costs in the future if we hire someone who may have, let's say, diabetes or a child with special needs or who may have a form of cancer that is in remission. You have to be, and the insurance company may look at the books and say, well, this is future hire situation is worth the risk. We are an insurance company to get this business. If you look at what an insurance company is, it is a pool of capital. An insurance company is kind of like a bank. It is a pool of capital from which risk is the overarching thing that drives the company. That's what an insurance company is. You take a pool of capital, you assess risk, you seek to reduce your risk and raise the pool of capital, and yes, profit from holding that capital, perhaps in another financial institution that gives you interest. Then when those that you have bet on have a downturn in their health, you take from that capital and you pay for their treatment. That's the relationship between the insurer and those who get the policies. Now, here's another thing. People always say, Andrew, what if I don't like my insurance? Well, you're free to move about the market. Now, here's something funny that's never discussed. You are covered from the minute you buy your policy. Your policy has a start date. From that start date on, you're covered. Now, you may have been with another company. Let's say you went from a company that provided Aetna to United, and you contributed to Aetna for like 15 years. Then after 15 years on that job, you went over to a company that had United. Do you get that money back from Aetna? No. But that doesn't affect whether or not United is going to take care of you. That was money that you bet against yourself that you lost. You didn't need insurance. You didn't need the treatment. Now you jump over to Blue Cross Blue Shield or United. Now let's say the day after you write the policy, you find out you got cancer. Blue Cross Blue Shield or United doesn't turn around and go to Aetna and go, can we have that money that this person has put in for the past 15 years? We got to treat them. You left one risk pool for another risk pool. 1-866-95-PATRIOT. Nobody wants to see harm come to the 47 million uninsured, although I think that number needs to be put in context. I think we all know there are people who choose not to have health insurance, and we know a substantial portion of the people being counted are illegals and aren't entitled to anything in this country. But let's play the game of 47 million uninsured. Nobody wants to see harm come to them. But no one is willing to give up what they have to support them. They might say it, oh yeah, I'm willing to negotiate, I'm willing to join the public. The public option is such a joke, it's not. I need charts to explain how funny it is. This belief that you're going to have a public option solely supported by premiums while not being able to deny people with pre-existing conditions. Do you hear the insanity? So the government is promising yet another lockbox, like Social Security, where the lock has been busted wide open. They're promising this creation of another lockbox that will not be paid for with federal tax dollars, but from voluntary contributions from those who choose the public option. And the public option won't deny anyone with a pre-existing condition. So you're going to see these sickest people without insurance running to pay the basic premium. Oh, wait, I forgot. Obama promised there would be a hardship waiver. Now, take a step away from emotion and the accusation of being cruel. Imagine, if you could, 10 healthy people paying for the public option with a considered cost-effective premium, cheaper than anything in the private sector. So 10 people are putting in $100 a month, and along comes an 11th person with a hardship waiver and a pre-existing condition that may be, let's say, cancer. Even with all of the capital that was raised from the 10 healthy people who are paying the government premium, there wouldn't be enough money to treat the 11th with the hardship waiver and the pre-existing condition. Now, some portion of that 10 healthy people are going to stop paying for the public option and go back to the private sector. As the paradigm shifts with contributors and non-contributors in the system will ultimately collapse. But the federal government's promise to keep it a lockbox and treat it like a private sector entity will have to be broken. So that will mean, just like the Social Security lockbox, the lockbox will be broken, and it'll be flush with federal tax dollars, and health care will go the way of Fannie Mae and Freddie Mac. And you'll have people like Barney Frank and Christopher Dodd running your health care system. Running the public option system. We know that the federal government will forbid the public option from collapsing. So the promise that it will be sustained solely by premiums, with the invitation of those with pre-existing conditions and those with an inability to pay, that right there mathematically, right there is the collapse. Because very few people are going to be willing to participate in a system where they are contributing to a system that others are not contributing to and can bring pre-existing conditions. That will be the basis of rationing. Once the rationing kicks in, people will leave the public option, if it's still considered an option, leaving the government no choice but to fund the system with tax dollars. And who knows where those tax dollars will come from? More debt, more deficit, cuts in military spending, tax increases, whatever.